This presentation provides an overview of the Victorian Auditor-General's report, Managing and Reporting on the Performance and Cost of Capital Projects. Victoria is investing billions of dollars in its capital works program to improve and build hospitals, schools, roads, public transport and other infrastructure to support the delivery of a wide range of important services. For 2015-16, the total estimated investment in new projects and previously announced projects still under construction in the State Capital Program budget is approximately $52 billion. This includes $28 billion in existing investments and $24 billion in new investments. Parliament and the community rightly expect that publicly funded capital investments are planned and managed in a way that delivers the predicted benefits on time and within allocated budgets. The scale and complexity of capital projects in the state budget mean that successful delivery presents a major challenge for public sector agencies. Unexpected cost blowouts can significantly impact the state's finances and affect the government's ability to deliver its wider policy agenda. Unforeseen delays also mean the community has to wait longer for the promised benefits, and unreliable benefit estimates risk distorting government's decision-making. Previous VAGO reports on major infrastructure have identified significant weaknesses and recommended improvements in the way projects are developed and delivered and in how outcomes are measured and reported. This audit builds on those previous audits of individual major projects. It is a broader examination of projects with a total estimated investment of $10 million or more, and which are listed in the 2015-16 State Capital Program Budget Paper. Specifically, we examined how effectively agencies manage the time, cost, scope, development and delivery of major capital projects. Despite the significant capital expenditure, we found that obtaining current information on capital projects across the public sector is a complex and challenging exercise, and there is limited public reporting. This lack of transparency makes it difficult to determine whether investments have enhanced government services and whether public resources have been spent in an efficient, effective, and economical way. Some agencies found providing the information requested for this audit onerous and resource-intensive. This raises concerns about the level of scrutiny they apply to their capital projects as part of their governance processes. The information provided by agencies show that a high proportion of them purport to prepare capital project documentation in line with the Department of Treasury and Finance's, or DTF's, investment life cycle and high-value, high-risk guidelines. However, our more detailed examination of 15 projects showed gaps or weaknesses in around half of these projects' documentation. This is a significant concern because complying with the life cycle guidelines can help mitigate the risks that projects will be late or over budget, or will not adequately define and deliver their intended benefits. Our recommendations target the need for agencies to implement a documented and consistent approach to verify that they have complied with DTF's life cycle guidelines. They also address the need for DTF and the Department of Premier and Cabinet to advise government on how best to track the progress of capital projects and make this information available to Parliament and the community. By providing this information, the government can improve project transparency and accountability and allow the public to compare projects using standardised metrics across agencies. It will also make it harder for underperforming projects to go unnoticed and easier for government to focus effort on projects where it is most needed. For further information, please see the full report of this audit on our website at www.audit.vic.gov.au.